The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, we're going back here to the Diagnostic Trading Hour. And getting everything set up and ready to go for you here. Looks like the markets are having some nice movement today. We'll be analyzing that step by step, walking on through it, and putting all the different pieces together. First thing here, let me get my chart up and showing for you so you can see everything. And that's one of the great things. Make sure you check us out, TFNN.com. You can check out Tiger TV, watch the trader screens and charts. Also, you can tune in over at TFNN.mobi if you're out and about, and hear the market commentary from live traders each and every day. And so right here, putting up the information, showing you where the markets are at, and get all that going for you here in just a second. And been looking at the markets. Like I said, we're getting a lot of good movement and some good bounces. And I got a chart of the pound dollar up at the moment, but I'll get a few more for you here as everything loads up. First thing I want to do before we go into anything is just do a quick review on the news. I love trading the news. We went through yesterday. We did a trade, and that one worked out really well. So I'm going to show you that one so I can wrap it up because we started it during the hour, and then we just kept going. But right now, as far as where are the markets, we got the S&P. The S&P is currently down 24 points, getting hammered. We got the Russell is down 25. We got the Nasdaq down 83, and we have the Dow down 151 points. Copper is up about 0.25%. We got gold up 1% on the day. People flying to some precious metals right now, about 13 points. We got silver is up 1.5%. Natural gas right here flying up. Natural gas inventory day. We got natural gas up almost 2% on the day. Oil down a little bit, down 22 cents right now. We got corn is off by a few ticks, not a big deal. Soybeans down 1%, down 13 points on the day. Euro dollar is currently up 35 pips. Aussie dollar is up 37. Pound dollar is down 4. Looking at dollar franc, it's down 34. We got the dollar CAD up 28. Dollar yen right now is down 49. Aussie yen down 19. Euro yen down 33. Pound yen down $1.02. So sort of the big mover right now. We got it, of course, usually is. And looking at euro pound, it's up about 30 pips on the day. But like I said, the indices are getting hammered. And so I want to go through and, like I said, look at the news and just walk through each piece with you, how to put the plan together and how to take advantage of it, because it's just fun to trade the news. And we talked about some of the trades yesterday, but the first trade I want to go through with you from yesterday, and I want to see if I can pull up. I know I saved a screenshot of this so I could walk through it with you. I was talking about how to hedge your futures and forex contracts. See if I can find that trade over here. Got it. Okay, cool. So let's pull this up. And it's one of these. Yeah, this is it. Okay, so we can go down here. And you can see what happened was we went long. This is right before the FOMC minutes came out. And so I put in a buy over on this contract. I'm trying to see if we got maybe a better shot of it. I guess there's a few of them. But yeah, there we go. Okay, so this is sort of where I summarized it. But we went in and we bought at 1853.25, and that's not even the best one. Where's the best one at? Okay, we bought at 1853.25, and when we did that, we then had exposure because we're walking right into the FOMC minutes news announcement. So we're long the futures, long the future contract, the ES, and we want to hedge it off. And I looked at, what if I went over and I bought some S&P, E-mini options over on the CME, bought some puts. And, the problem was they were $9. I got to buy 50 of them. That's one contract, has 50 options on ES. Futures are a little bit different than your equity options. Instead of equity options are always 100. Futures, it varies. And so 9 times 50, I'm like, okay, that's $450 I got to put up. If it went down against me, down to settlement, I'd only make $250 to hedge off a $425 risk. Or I could go in and actually I think it's $435 risk on the trade. Or I could go in and I could buy Nadex spreads, put up $125 on the trade. If it moves against me, it'll actually cover $400 of the $435. So that was pretty nice. I'm like, wow, I could put up a lot less money and I get a lot better hedge. The reason I get a better hedge is I have higher gamma. The gamma makes my delta go faster. My delta goes faster. I get more of a 1-to-1 coverage because the spread, it's sort of like a put, you can expire in 90 minutes. So it's right near expiration. Okay? So the ES put option, I had to put up more capital. I made less profit to the upside because I had to overcome all that premium that I put up. And I had a smaller hedge because the gamma's lower, the delta's lower, therefore I have more risk on the trade by putting it on and less profit. The Nadex spread, I put up less capital, make more profit, have a large potential upside, larger hedge, which means I have less risk on the trade. Go in and look at the trade. We go in and we buy at 1853.25. The risk on our hedge is 1853.25, and the opening price I sold at 1852.5. So very, very small risk. Right there, that's actually 0.75. That's $37.50. It's my max risk down to 1845. So we're talking 8-9 point drop. The most I'm going to lose is 3 ticks, 37.50. We're going to lose. One of those is bid-ask spread. Okay, so no matter what, you're expecting to lose a couple ticks if you lose on a trade. So we've reduced our risk down to 3 mere ticks. Okay, 37.50 in risk. Market goes down, fine. I'll get out of the trade. I lost $37. Who cares? Okay, it's an S&P E-mini future. Market goes up. It goes up to, and I set my take profit at it sitting right there up at the top, right at the 1 deviation level, and is waiting on it to go up. I had to stop down at 1845 because I need to take my profit on my spread because it no longer can hedge me and close out my future. It flies on up to 1862. I take my profit, 437.50. Lose the 125 on the the hedge, the insurance premium. That's now gone. It's like when if your house burns down, or your house doesn't burn down. Either way, you're paying the premium every month. Okay, so 125's out. Profited 437.50, and the net profit 312.50, not including fees. If we go in 5 expire. So what is that? 450 plus about a $4 round turn, about $850 in fees on the trade. So 304. About $304. Net profit. So your return on risk on the trade, about 800% return on risk on the trade. Trading a full futures contract and just hedging it off with spreads. So that's the summary on the trade. Very cool. Very cool way to trade news. You have a directional bias, fine, take it, but hedge it. And hedge it with the best possible delta gamma that you can get for that trade. Puts are horrible hedges. You pay a lot of premium on them, or you have a massive deductible, you could say, because it has to be out of the money. So either you're paying massive premium or you're doing that. So there's a lot of trades out there you can check out. I got a trader right now calling out one in the den. He's like, hey, check this trade out. We'll look at it. Let me pull it up. Let's see here. Got Jay here in the den, and we're going in. He's like, hey, check out the U.S. Tech, 34.90 to 36.90. Okay, now there is a little caution tell I'm going to tell you on the U.S. Tech, but let's pull it up. Let's check it out. Okay. Let's just drop all of our filters. And you're looking at it with a 34.90 to 36.90 right there. Okay. So 34.90 to 36.90. That's actually really good. Okay, so it's a $20 risk on the trade. It's $180 profit potential on the trade. because the market's flown down so far. And we're basically at the bottom of the master spread is what's going on. The only problem I have with U.S. Tech, which it's really good if you're a new trader, smaller account size, all that. The problem I have is every point is, like every tick, so one tick is one whole point on Nadex. So it's like 4 ticks to a tick. So it's very low leverage. Okay? So meaning like that 3 tick break even, like that'd be 0.3 on the S&P 500, but that's actually 3 whole points on, that'd be like, what is that, 12 ticks on the US Tech. So, yeah, so that definitely, I mean, it's a great upside potential. It's 3 points of risk. If you want to go short, cool. If you want to go long, you can do that with it. Just be aware that you're really not going to get leverage that you're going to like on the trade, unless you are starting out with depending on your account size. And it's one of those things that sort of pisses people off when they come in, because they go in and they're like, oh, I love trading NASDAQ, and they trade it and they're like, man, this thing, it doesn't make anything when it moves. They don't understand that it's moving in one whole point. So the NASDAQ has to move 4 ticks for it to move 1 tick. Now that goes for you and against you. It goes both ways. So I mean, it's good and bad. Good in the sense of it'll go against you 1 tick at a time, 1 point at a time, but bad in the sense of when it's going in your favor, it'll go really, really slow. I'll pull up a chart of the NASDAQ. We'll look at that real quick. See what we got. We're down at a 1.5. Actually, we're down at 2 deviations right now. So there's like a 4% probability the market continues lower at this moment. I don't even know if it's that high, actually. I have to go back and look at my stat numbers. But doesn't mean it won't do it. I've seen markets hit 3 deviations. I've seen them hit 4 and 5. It's just your standard probability. Man, that is just beautiful, isn't it? You gotta love that. This right here, here's what you're doing, okay? Is you'd actually be going in probably and actually buying this contract and selling the NASDAQ and just seeing, hey, if this thing really goes. So here's the issue. Remember I said that hedge thing? You're talking about 20 Nadex spreads to equal 1. Because it's really interesting. Basically, it moves 1 whole point is only worth $1. Okay? On Nadex, on the NQ, 1 point is worth $20. Because it ticks in quarters and it's worth $5 a tick. So you need 20 spreads to equal it. So to actually equalize this thing out, we'd have to go in, we'd have to buy 20 of these. Gives a $260 risk on the trade. I don't know if I quite like that much. That's a pretty big amount of risk. I mean, that's one NASDAQ contract. So a really important lesson there. All right, stay right there. We'll be right back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour, and so we got all sorts of things going on. But one of the interesting is sort of a misnomer. We got with the, and I talked about this yesterday, the official bank rate on the pound, and a little bit different, MO, I guess you could say. They opened it at 7 a.m., and they released it then, and we didn't do it at the same time as they usually do. And so I actually backed off on this one. Usually it's a pretty big mover, but it's odd that they were doing the bank rate, and they usually do it the previous week. They did the same time that the euro does theirs, and so we avoided the trade. I didn't even add it to the news plan, and I was really glad I didn't. I'm just like, this isn't normal. I look at all the other ones. Let me show you what I'm talking about here. Look over here on here's an example, like on Forex Factory. Okay, see we don't have the euro on here. It actually happened last week. But let's look at all the previous ones right here. Let me show you what I'm talking about. And notice how we get the euro. Minimum bid rate, minimum, press conference, euro. Bid rate, press conference, right there. Euro, bid rate, press conference, euro, bid rate, press conference. On down the list. Okay? And I'm like, what in the, why do they not have it? And so it's just, it wasn't part of my normal statistic. And so I just said, hey, let's leave that one alone. Let's not trade that. Something's just weird about it. Next release is going to come out May 8th. I can click that. Let's see. We're going to be back up. Now we're going to be back on schedule. So next time we'll look at the trade. So in May, for whatever reason, this week it didn't line up. I don't know if it's, who knows, holidays, daylight savings time, whatever. I have no idea. But they'll be back on schedule, so we'll be back in the trade. But on this one, we just we stayed out of it, and I'm glad we did. Worked out well. The one trade we did have that we knocked out last night was we went in and we had the Aussie trade come on up. And we were looking at the Aussie employment change. And I got a solid 60 pip move out of that. We were expecting a move of about 45 to 50, potentially up to 60 pips on the move. But worked out fantastic. And let's go ahead and pull that one up. And that was the one trade I had on the roster there. And usually a very solid trade. So it played out again perfectly. Had some traders tell me they cleaned up on it. So very cool. And some people made 20, some people made 100, some people made a lot more. And again, this was last night, and came out over here at 8:30, and you can see just boom, done. And so right on time, flew on up about 56 from release to high. So perfect trade. We were looking for about 45 or so, and worked out very well. Also notice, okay, just a good important thing to check out and notice, we went right up. Let me see, let me back this out a little bit on the zoom so you can see it. Over here, there we go. Okay, notice we went right up to the 1 deviation level. Okay? And so you should have had your stop. I don't care if you were at 1-to-1 or not. I don't care if you're 0.7-to-1 or whatever. You should have your take profit right at that deviation. So make sure when you're doing these news trades, especially on the stringles, okay, or the straddles, make sure you're setting your take profits at those deviations. Don't count on it to break through them. Because, I mean, I've seen tons of times where it will touch it, hit it, and bounce right back. Okay, notice this did actually fall all the way back after. It actually would have worked out as an iron condor, too, because it came all the way back if you didn't take profit. So whether you did a straddle or an iron condor on the trade, either way, you should have had a nice profit on the trade. So it worked out really well. Straddle required you to take profit. Iron condor required you to sit tight and let it do its thing. Okay? And let's see here. The next thing we got on our news trading list. I got a couple more things in here I know I want to go over with you. But that was sort of just unique with the whole pound thing. We got G20 meetings and G7. So, you know, what happens if you're part of both, right? But anyway, so G7, I mean, that's like Canada, US, UK, Germany, Japan, France, Italy. Okay? G20, like that's the G7 plus others. So I guess they're having their own little private meeting at the same time. Trying to figure out how to handle Russia and everybody else. But things coming out of that, rocking the markets. Stay right there. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. Reminder for you, you get these big news days, big move days, whenever the market flies, you may not have current hour, next hour expirations. You may have to go ahead and go out further in time, okay? So just literally go further out, find a further out expiration. It's okay to do that. So it's all right. You'll get plenty of movement on them. So that's definitely still a choice for you to go in and grab those. And you have to find expiration. But so when you have these kind of big moves, and you'll get new expirations every hour. So here at 2 o'clock we'll have a whole new batch loading up. So don't forget about that either. Okay, so anyways, we got the Aussie did a great job moving, and the market's just it hadn't done much at all compared to the market today. It would all tap into the market, but we got all the earnings announcements that's coming out. So I want to cover some of those with you. What's coming up on earnings that you need to be aware of and take advantage of, and it's interesting. You got this whole G20 thing going on, and Russia's part of that. They're like, NATO's inventing the whole Russia threat of the Ukraine, and then stuff going back and forth, back and forth, back and forth. So all day, and I'm trying to see if there's anything else that's really top of the list at the moment that's new here just within the last hour or two. But it just keeps going. So let's see here what else we have that you need to be aware of. Tonight, China has their CPI coming out. So, just be cautious if you're trading FX. That's at 9:30 tonight. No real stats on that yet. I don't have all those gathered up. But, obviously it can impact the news. And let's see, I'm trying to see if there's anything else we want to be aware of, because I want to make sure you have all of your pieces together for your news and announcements. We got Wednesday. We had the bank raid, which we avoided. We got PPI on Friday. So looking over tomorrow morning, we got the PPI. Let's see if there's anything there that's really worth looking at. And looking at all the different FX pairs across the board. And just trying to see if there's one that's much better than the others. You got some crosses that do well, but pound yen actually looks like it might be among the best. It's even better than pound dollar on it. So pound yen, if you're wanting the volatility, we check it out. I'll pull it up. We'll go through it and see if we can put together a trade based on the PPI report. Let's see here. Well, we got about 80 pips on the last one. Wow. 112 in the one before that. Going in about 30, 40, 30, 40, 50. I guess that was bringing up those averages. Had a couple big moves recently. But, okay, I got about 80 pips the one before that. 40, 90. So we got about 6 of them had about 80, 90 pips, and the other 6 were like 20 to 40 pips out of the last 12 months. I really, not my favorite combination there. It's like a 50-50. I'd rather get something that's consistently one or the other. Looking over at the euro dollar, now that stays pretty tight. We're averaging about 20, like actually somewhere between, it may go 30 or 40 pips, but it's ending on about a 20 pip average. So great iron condor, 11 o'clock expiration, iron condor on PPI. Get in before the announcement, pretty close to 8. But get in before the announcement. Understand you will have some volatility. It may even move 50 or 60 pips against you. So, but it usually comes back. I think the highest close I see is like 40. Right around 40 pips is the biggest move I see as of expiration, as of 11 a.m. So yeah, that would definitely be probably looking for 30 to 50 bucks on an iron condor on the PPI using the euro dollar. And let's see, is there anything that looks like it's even weaker? I mean, dollar franc would definitely work as well. Let me see, let me pull that up and just verify information on that one, but that could be a good trade for you. And let's see, we'll pull indices back up over here, see how they're doing. And let's see here, the dollar franc, 20, 30, 20, 30, 25, 20. Yeah, that's about the same thing. So, euro dollar, dollar franc, dollar CAD has some wild swings, pound yen has some wild swings, even Aussie dollar has some wild swings. So, I'd actually put my favor on out of all the currency pairs. I'm looking at 20 different currency pairs. I'd actually choose either dollar franc or euro dollar. Looking for at least 30. Ideally is the higher the better, but at least $30 to $40 iron condor. Meaning my combined max profit on both sides is $40. So I guess you get it as early as a 7, but there can be some volatility before that. I'm trying to see how much does a pre-volatility, market volatility impact it. Okay, there's some times when there's some massive pre-market volatility. So, yeah, definitely I'd go with 8. 8 looks like the better choice out of the. Like some of them will start sooner, but I don't think that hour is going to be worth it to you. So, we're looking at 8 a.m. entry for an 11 o'clock expiration on the trade, and we got the indices just flying down. Literally doesn't get any better than that. And pull up a diagnostic chart over here. We'll look at that as well and see what we got. I'm sure I have one over here. Okay, I got the pound diagnostic chart. Let me go in and we'll switch that over. We'll check out the Russell on it. There we go. Let's flip this up and go on into pull the Russell up and see how that one's working out. Nasdaq just hanging right there at 2 deviations. Russell's hanging right there at 2 deviations. Trying to decide if it's going to break or not. So May finally ran out of all the juice there. But that's one heck of a day. Just some awesome movement. Okay, so really the only other trade we got left in the week that's worth mentioning is PPI in the morning. Again, we're looking at Eurodollar or dollar franc, $35 plus total max profit with the combined sides of max profit. Iron Condor doing a buying the spread below, selling the spread above for the 11 a.m. expiration on the Nadex exchange. If you don't have a Nadex account yet, then hop on over to TFNN.com. Click on the Nadex banner on the top right side of the page there, okay? And right here, click on Nadex. And then click on Trading, Demo Trading Account. Fill in the username, first name, last name, phone number, email address. You can apply for demo. And you'll get an email right away where you can log in. You can get set up. You get $25,000 of funny money. If you want to get that demo extended out, it's pretty easy. Just click Create Account, open an account, fund it with $100. It's a minimum funding requirement. Place a single trade. Now you can fund it with $500, $1,000, $5,000, $500,000, whatever. But if you fund it with just $100 and do a trade, or $50,000 and do 50 trades, whatever. But if you've done one trade, I don't care if it's $3 risk, you can call them up and they will extend out your demo for a year. Okay? And they'll basically extend it every year that you do a trade. So, which that's the current policy right now. So you just call them up, numbers at the bottom, place your live trade, boom, extend my demo, boom, your demo's extended. And of course, obviously you're going to want to trade live, you don't want to trade demo forever, but demo's a great place to get in there and make mistakes, learn things, test ideas. It's a lot of kinder teacher than live is. And yeah, look at that. That's just a perfect diagnostic trend all the way down. I just got to ride that thing. It's sweet. Okay, so that catches up on the news. Got a good little lesson in there on watching out on doing these kind of contracts right here. Going in and they don't move. So the Nasdaq ones don't move that much. So as great as they look, you're not gonna make that much. Like $13 risk, 13-point risk move. That's 185-point up move on the Nasdaq. So even though the profit potential is huge, unless there's some reason for the market just to rally like crazy, which hey, always possible, but pretty rare to see a triple-digit Nasdaq move. Welcome to 2008. Who knows, man? It may be right around the corner. But anyway, so yeah, watch out on those. Your ES actually going to have your higher leverage. Your ES, corn, and silver have your highest leverage over on Nadex because they tick faster. They tick at 0.1 to 0.25 comparatively. So they actually have a faster tick ratio than the underlying futures contract. So they have higher leverage, which means you're going to make more and potentially lose more on the trade. Your lower leverage contracts are going to be it's going to be Nasdaq, it's going to be silver and copper. Okay, so those right there will be your lower leverage, meaning they tick larger. So you'll make less, you'll lose less. Okay, and then you got some middle of the road ones. That's going to be actually your international indices right there because they tick like a little bit larger, but it's like half a tick. Okay, so they take in 1 versus 0.5. Not really a big deal. Same thing, 1.5 on the FTSE, and the Nikkei is actually higher leverage. It's 1 versus 5. So That's actually a higher leverage one. I included that in the wrong group. That should have went back in with the US 500. But anyways, check that out and put those pieces together. If you don't have access to the scanner, you can grab it over on TFNN and get access to it right away. It'll help you out. There's a lot of tutorials in there about how to trade Nadex. You can message me with any questions you have, and I'd be glad to help you out in any way possible. The other thing to do is, just practice these news trades. I call them out every day. Teach you how to do them. They're not as hard as they sound, but if you'll just practice them, and maybe we'll do some webinars just on news, a whole news thing or something, and put something like that together, and just teach you how to really put each piece of the puzzle together on this. If you can get it down, then it'll, which you can, okay? Then it's, even if you don't like to trade news, and you'll end up liking to trade it, but it'll teach you how to actually pay attention, know what's going to happen, know what the expectation is. Tie that in to whatever, tie that into whatever expectation you want to, but whatever system you use, if you know when the news is coming out, you can know, how should this impact my trade? What should I do? Should I take profit? Should I tie my stop? Should I take my loss and get out? Should I hedge it off? How far should I expect it to move? So the more you learn about these little fundamental things, that you're a step ahead of the markets, okay? Versus if you don't know, you're going to be a step behind and get whacked, all right? So that's the heart of, diagnostic trading. Diagnostic Trading Hour is being one step ahead of the markets by looking at how do fundamental traders look at the market. How do statistical traders look at the market? That's like deviation levels and ranges and close to close. How do seasonal traders look at the market? That's times of day, times of the month, times of the year when certain things move. And then, so we got our statistics, we got our fundamentals, and then we have our seasonals, and we have our technicals. And that's just how do technical traders look at the market. And really, part of that's like, I'll look at fibs, I'll look at support resistance, I may look at Gann and golden ratios, things like that, just to get an idea of where other traders are placing their orders, so I know where the sharks are going to take the orders to, because the market moves to fill orders. That's it, not to follow our favorite indicator. And so once you see it going, you know where it's going by looking at where are the orders stacked. That's like the magnet prices and everything else. And the more you understand that, you start becoming the supplier. You start like swimming with the sharks. You start becoming that remora fish, and versus becoming a school of fish that gets eaten. And you start getting in where everybody else is getting out. You start getting out where everybody else is getting in. And you start trading along with the market movers, market makers, the hedge funds and everything else as they're really moving the markets. And you want to be one step ahead, but you need to understand. You need to stop back and you start working one step at a time, reading volume analysis, reading price action, understanding proper expectations of movement, deviation level, statistics, and putting all of those pieces together. And all of a sudden you actually are really analyzing the market, not just following arrows. It's amazing. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. And so we're going in looking at the markets. Markets flying on down. We went through a hedge trade. And so hopefully you were able to pick up some of that, learn about that hedging. If you're trading futures or Forex on S&P, Russell, NASDAQ, Dow, FTSE, DAX, Nikkei, oil, natural gas, gold, silver, copper, corn, soybeans, euro dollar, pound dollar, Aussie dollar, dollar franc, dollar yen, dollar CAD, pound yen, euro yen, Aussie yen, euro pound. If you're trading any of those, you should be hedging with Nadex. So, if not, you are taking on more risk than you need to, and you're causing yourself more stress than you need to, and you can have plenty of upside and give yourself not worry about getting stopped out so quick and lower your risk. And I just spent the last weekend, I was out in Denver and taught a bunch of futures traders how to do this. And went over it again yesterday, so hopefully you picked up that lesson there. But really one of the most powerful lessons, it doesn't matter what your system is, okay? It's how to do it, but it's also making sure you pick that right spread. You got 12, 13 spreads available, and not just guessing that you have the best one, because you'd be amazed how easy it is to give up an extra 20 points a hedge, and it didn't cost you another dime. Or, I mean, it's just because you're acting fast. You don't have time to analyze 50 things. That's the whole point of the scanner. Act, see, act, respond. Not see, act, think about it for 10 minutes, respond. So 10 minutes is too long. So either you don't need the hedge or you wish you had it on, one of the two. So you just want to be able to act as fast as you can. And let's see here. So we got all the news wrapped up. Let's talk about next week. Just a quick preview of what is coming on out. And from what I can see that we have on the list, like I said, we still got G20 stuff going on. And IMF meetings are actually starting up tomorrow as well. And so funny, you used to never hear about the IMF, and now they're everywhere. They even got their own currency, which is like a basket of currency. But that's a long thing to get started on. Creature from Jekyll Island. So there's a book for you if you want to learn about the IMF and all that other fun stuff. Anyways, yeah, so day 1, day 2, they have a 2-day conference going on. Day 3, so they're going into Sunday. FOMC member's going to do a speech on Sunday. And, he's talking to the IMF. So he's actually doing a speech at the International Monetary Fund Conference. There will be a Q&A, and the topic is incorporating financial stability considerations into a monetary policy framework. That's at 1:30. May have a little impact in the market opens. We'll see. Going into Monday, we're going to have core retail and retail sales on the dollar, so that'll definitely have an impact. We'll be looking at that. We're going to have the monetary policy meeting minutes of the Aussie. Doubt that'll have much of an impact, but we might build a condor. We'll look at that. Next Tuesday, we're going to have CPI over on the pound. Manufacturing sales in Canada. Yellen's going to be giving a speech on Tuesday. Let's see here. We're going to have a GDP, industrial production, a whole bunch of big numbers coming out of China. A lot of numbers coming out of China Tuesday night. So you'll hear China in the news next week. And let's see. Building permits. Bank of Canada's interest rate statement's coming out next week. That's definitely going to cause some stuff. Yellen's going to have another speech. She's up to talking all week. We'll have a core CPI, a couple bank holidays happening next Thursday, and a lot more happening next Friday. So Good Friday coming on up. All right, y'all have a great day, and see you tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.